different we'll go through a few different just like incentives and things that are going on right now, stuff that's going on for November, stuff you may or may not have seen yet. And then I'm going to go through the sort of like scenario-based training stuff, talking about different kinds of life insurance, but mostly just focusing on buy term and invest versus cash value whole life stuff, because that's the majority of what you're going to come up against. And just know that like by extension, if you understand how to sort of like compare and beat a cash value policy, if you come up against an index universal life policy, they're worse, right? But we can break that down on a more like in-depth level if we need to later on. Tell me if when I hit the screen share, if the way you guys see me on the screen looks funny, because I changed a setting. So like I think I'm gonna be like floating in front of it. Does that work? Or is I just am I off to the side somewhere? Just throw it in the Zoom chat for me so I can kind of get an idea. Okay. Guess what? Like, am I floating or am I off to the side? Front left corner. Okay. Okay, good. Good. So listen, it's convention season. Okay. Now there are 601 days until convention, but that's simply because this year we're skipping a normal convention cycle. Right. So normally convention is every 2 years. Primerica's 50th anniversary is coming up in 2027. Therefore, we're skipping the 2026 version of convention. That would normally be next summer. And so we're going straight into the 50th anniversary. So like, why do I even bring it up? One, because I want you to get it on the radar, just so you can start thinking about it. Two, so that you see what a big freaking deal convention is. Guys, it's in the Mercedes-Benz Stadium. It's up in Atlanta. Primerica literally rents out the entire Mercedes-Benz Stadium. Has anybody ever been there for like a Falcons game or anything? I mean, there were a few of us at Primerica or at the convention last year, but just think of the size of that place. You're talking probably 45, 50,000 Primericans that are going to be in that place. Crazy. So get it on the calendar now, July 7th through the 10th of 27. It's going to be the biggest one ever. Okay. And so that's way out there, but we've got another one coming up, right? So we've got East Coast Builder School coming up. It's our own event. It's this January. It's down here in Clearwater, Florida. There's not too many other places I would rather be in January than Florida, right? So thank you, Haley. She just threw out the link out there for you guys. You can scan that QR code that's on there. There's going to be seven, potentially eight different $1 million a year earners that are going to be there with their entire hierarchies, pouring into everyone there, right? Whether you're there in person or there on Zoom, it's your call. Look, if you can't make it in person, that's totally fine. You at least need a ticket on Zoom so that you get the recording, you can watch the replays. But I promise you, if you truly want to experience the business and build some fellowship, get that going, you need to try to get down here in person. You have to. You truly have to, right? Matt was here for the first one in May. He moved to Indiana. He's kicking himself for not making it down. Trust me, bro, you do not want to be up there in January. You would much rather be back down here, at least for a long weekend. Okay. So ticket prices are 30 bucks right now. Look, that's 30 bucks whether you Zoom or you come in person. So just get it and then decide later what you're actually going to do, but at least you'll have the recording. Okay. So get that. Make sure when you register, use your rep ID, and then make sure you register under my RVP rep ID when you register CNR3V. That's me. Okay. If you have questions on that, don't hesitate, just reach out. Listen, for those of you that are licensed, there's an opportunity for you during the month of November to write personal premium and get a bonus. Okay. And so you're in position to get a bonus. And if you grow the amount of premium that you wrote this November over last November by 20% or more, you get an extra 30% bonus. So, I mean, I've never seen this. They did this last month, but I've never seen it before last month. And now it's 30%, not 20%. Last month, it was an extra 20% bonus. So, Matt, for example, you were not in the business last November. So, if you write 5K personal this month, not only are you going to make about 3 grand, you're going to get a bonus on top of that because you didn't write anything last November. So, you're automatically going to qualify for growth. So, you'll make an extra couple $100 just for doing it this month, right? Not only that, if you're coming in person, that gets you into the brunch with Andy and Brittany and everybody else that writes 5K premium. So there's a lot going on right now this month for anybody that does 5K personal. Okay. Because that's below RVP. If you guys have questions on that, like don't hesitate, throw it in the chat. We'll get those answered. Just know that if you're already licensed, you want to like get this done. This has been a big one. We've been talking about this a lot, right? So free licensing, free IBAs for military, for spouses, veterans, retirees, anybody that has ever served in any capacity whatsoever that can prove it, we can waive the $99 IBA licensing fee. They still pay the 25 for their POL, but that's it. Guys, think about it. They could be in the business for 4 months, 5 months, actually, 5 months, and still be just barely paying what they would normally pay to sign up. In 5 months, they could get their life license, their investment licensing done, and they could get it all done for that first $25 like POL fee. Listen, if you've got people right now that are even like on the fence, you need to get them in and get them started. We waste $25 on stuff we can't even remember. Just get them into the business, give them the opportunity, give them the flexibility. Don't let anybody tell you I need to wait until after the holidays and blah, blah, blah. Hey, listen, I know you might want to wait, but would you rather wait and spend 124 bucks or wait and decide that you just didn't want to do it and then we just turn it off? That's what I thought. Let's just get you going right now. Sound good? Perfect. All we need is a copy of your ID card or your old DD 214. That's like your discharge paperwork, right? So trust me, if you say that, they know, right? If you have questions about documentation or anything on that, just message me. We can go over it and show you guys how to get that done. But here's the biggest thing. Here's the kicker. It includes spouses. We've never done this before. Primerica's never done this before. You can recruit spouses now. So, guys, if you bring somebody into the business, whether it's the service member or the spouse, you should get both of them. Here's why. Whoever's going to be the lead code, you recruit the spouse, it's an automatic setup for a bonus and a promotion, and you can get it done with both of them for 50 bucks. 50 bucks, right? Look, I'm at the point now where I'm honestly like, look, I'll just pay the 50 bucks for you. I don't really care. I don't want you to waste this opportunity. Okay. So that's sort of mine. Like I know we've all probably sponsored somebody along the way, right? I would much rather pay 50 for two IBAs than 100 for one. Because if they're gonna quit, I'm gonna get a refund anyway. Just I'm just saying. I'm just saying. So military in the payment section, if it didn't automatically come up, you'll have to manually type military in the payment section for the coupon code if you're doing a military IBA for a spouse, because the only way it automatically goes in is if you put veteran or active or whatever. Okay. So just note that you'll have to manually type that in. The bonuses from last month for all the client solution stuff still carried over again for this month, right? So auto and home referral. Matt, bro, in Indiana, I would be going ham on this right now because it's a gray state. It's a great icebreaker for you to reach out and talk to people. Like, hey, if I could save you some money on something you're already spending money on, wouldn't you want to check? There you go, right? So the first one you'll get paid your commission, the second one you'll get paid your commission, the third one you'll get paid your commission and a $75 bonus, and the $75 bonus on every single one after that. So as soon as you hit your third one on just a home and auto referral, just for the car insurance, you'll make 175 bucks. No, it doesn't matter where you are. It's where the client is that matters. So as long as the clients are in Indiana, it doesn't matter, right? And I mean, think about that, dude. Just if you did, let's say you did five, that'd be 500 bucks on the actual commission, and it'd be an extra 225 for the bonuses because you will get a bonus for three, four, and five. I have no idea how to make my hand go down now that I did it. I got to turn these stupid reactions off. It'll go down at some point. I don't know. PLPP and identity theft, those are out there as well. You can get future RVPs, right? That means everybody that's not me, right? If you do three personal, not only are you going to get paid the commission for it, you're going to get a $75 bonus on the third one. PLPP and identity theft can be combined. Okay. That means if you get somebody a legal shield and you get them an identity theft to go with it, that's two. You just get one more of either one and you're going to get a $75 bonus. It's almost like doing another. what, two legal shields or like five ID thefts combined for the bonus. There you go. I know I said I was going to forget about it, and I did, and it's still up there, and I don't know how to stop it now, but whatever. It is what it is. The rest of them are for the base shop. But guys, like I said before, like if we hit these bonuses, right, as a base shop, if we hit these bonuses, look, it's only six or more, and it's a $500 bonus, right? The arrow on the react button, it doesn't. There is no react button on my thing right now. I think it's because I'm screen sharing. But if we hit that bonus, look, I'll pay that back out to anybody who helped contribute to it. I'm serious, right? So go knock it out, right? Go get a couple of PLPPs. There are people out there right now that I know that need wills, right? I did one already. I'm going to do an identity theft with her tomorrow, so that's going to be two. So that means four more that are out there and we'll hit that bonus. Hey, look, if I helped contribute to it, I'm keeping a share of it, right? I'm just saying. But if we get more than six outside of me, I'll do it as well. I'll do it as well. And the Vivint, guys, like the Vivint is out there, right? You do a Vivint install for somebody, you're going to make 250 plus whatever incentive is going on. It's usually an extra 250 or it's been an iPad. It just goes back and forth, right? And so those are great, right? Those are great. That's it's really easy. It really is, honestly. All right. I left these in here just to kind of give you guys an idea. 200K takeover and 50,000 securities licenses. That's Primerica's goal at the end of the decade of dominance, right? So by 2030, we want to have 200,000 licensed agents in the field and 50,000 securities licensed agents as well. Okay. So just big goals, big numbers, but we got to talk about it. Otherwise, we're never going to hit it. And here's the other one. This one's crazy. We want to put a total of $1 trillion of protection in force for families. We're at like 930 billion right now, something like that. It's a lot, right? So another $70 billion like in force is a huge number. And but that's the goal, right? Like the company's got big goals because remember, your goal's got to be big enough to get everybody to fit inside of it. And so that's kind of where we're heading right now. Any questions on any of the incentives and that sort of thing?
There's also still the new rep incentive with Vivint.
Yep. New rep bonus incentive for Vivint. If you go watch the training and like answer the questions or whatever that are in POL, I think it's like an extra $100 for a bonus,
You, if you do the video and have one install within your first 30 days, it's $200.
an extra 200. So that's 200 on top of the extra commission or 200 on top of your commission plus it like sets you up for everything else plus whatever other incentive is going on. So it's crazy. There's a lot going on. That's a $700 like rep commission and bonus on top of everything right now. That's insane, right? That's essentially that's more than what your 50% commission bonus would be, right? Your three by three. So that's awesome, right? That's awesome. All right, but why are we here tonight? I'm gonna fly through this a little bit and then I'll answer any questions. If there's no questions, I've been up since 3:30. I'm gonna go to bed. So just saying. So if I'm talking too fast, it's because I'm tired. But here's some scenarios, guys. Now, these are real, right? Like all the personal data has been removed from these, but there's three sort of different scenarios that I want you guys to see, and it's why we do what we do. Okay. So the first one, this is sort of like the best case of some bad news, right? This was one of my clients from very early in the beginning. She's 28. We took out a $400,000 policy on her. And it was primarily because we could not insure her husband, right? He was a drug addict, recovering alcoholic. That those things in his record would made him uninsurable. She was a teacher and was sort of like on the fence. She's like, I'm covered at work. I don't really know. And I said, look, we're just going to apply and see how it comes back. We applied. It came back. It came back cheaper. She was super happy. So we put it in force. And wouldn't you know it, 9 months later, she's got crazy cancer. So do you think she's still at work? Right? If she's got like stage three cancer and things are going really sideways, do you think she's still at work? No. So now she's not at work. What do you think she left behind when she left her job? Her benefits, right? She left her work life insurance behind. She left her work health insurance behind. She was on her husband's, luckily, right, at that point. But you know what she did have? A $400,000 policy with us She's guaranteed insurability forever. The increasing benefit rider is still going. So every year she's adding another $40,000 to that policy, even though she's got very, very close to terminal cancer. Now she's in recovery, she's beating it, thank God, right? But do you think she's ever going to be insurable anywhere else ever again? No. But what's crazy is as the increasing benefit rider keeps going, for the next 7 years, her policy will keep adding 40 grand a year until the point where she's going to have $800,000 in life insurance at year 10. Her policy is effectively going to double. And the cost for that extra 400,000 is going to be cheaper than the first 400,000. Happens every time, right? And if it's not cheaper, it's like equivalent, even though you're 10 years older. It's pretty crazy. So that's like the good news story, right? Now, the other piece of that is had that cancer gone like one level worse and she became terminal, you know what she could have pulled out of that policy? 280 grand, 70% of the policy in cash advanced because she had the waiver of premium attached. So 280 grand up to $400,000, depending on the size of the policy, guys, right? That would have been life-changing for their family had they truly needed it. Luckily, they didn't, and luckily she's doing well. But wouldn't you rather have the option to have it? I would, right? I would. So here's like the bad side. And the takeaway from this one is don't wait, right? Don't wait. How many of you guys right now know somebody that had said, "Oh, yeah, I'm gonna get to it." Put it in the Zoom chat, like right now, like of the whatever 20 people that are on right now, 18, how many people do you know right now that said, "Yeah, I'm gonna get to that"? Pretty much everybody with a license, right? Because everybody's heard it at some point. They're like, "Yeah, I'm gonna get to it. I'm gonna get to it. I'm gonna get to it." Yeah, I don't need that yet. I'm gonna get to it, right? Ye- So, guys, answer this. Do any of us know when we're going to die? Do any of us have a clue when we're going to die? No, we have no clue. But we would all agree that we are going to die at some point, right? That is guaranteed. That's guaranteed. So if we know that's a guarantee, but we can't promise when and we don't know when, how can somebody say that they don't need it yet? They can't, right? Hey, listen, I understand you don't need it yet. You're super healthy, but wouldn't your spouse rather you had it just in case, right? That's overcoming that objection, guys, because we all know what's going to happen. So here's the scenario with this guy. He waited too long, right? This is one of my buddies who's on his way to retirement. He waited too long. He did all of his medical paperwork, documented everything. The dude is still healthy as a horse, right? He can still run. He's still super fit, fairly lean. He's in shape. He's overall healthy. But if you don't look at the person and you just look at him on paper, he's uninsurable. He's got everything that you can imagine documented because he was working on his VA rating, right? And so that's where we come back and say, look, I don't know when it's going to happen, but it's going to. Let's get everything in place for you before you have something on paper that makes you uninsurable. Sound good? Who do you want as your beneficiary? Right? We're just going to apply and see how it comes back. What's the worst thing that happens? That's it. Right? That's it. And then here's the last one. So the moral of the story is, right? Get it on paper now in terms of getting your coverage in force, because once the coverage is in force, whatever happens on the backside, you're already covered. That's the point. It's sort of like getting your health insurance and then finding out you have cancer. Well, it's not a pre-existing condition. They're going to cover it, right? Same thing with your life insurance, guys. Like once it's there, it's there. And so this one kind of stings a little bit, right? But this is why the child riders matter so much. The first death claim we ever paid was on a child rider. It was on a client who really didn't want to submit it. Her kids were a little bit older. They were like 16, 17. One was almost 18, about to age off. Well, we got him covered. We covered all the minors. Why? Because one child rider covers every minor child in the household. She was like, "Oh, we don't really need to add them." I was like, "Well, why? It's free. It doesn't matter. If you're going to cover the 11 and 10 or whatever they were at the time, we should just cover him too." She goes, "Yeah, you're right." So we covered them, about 14 bucks. All of them covered for 25,000 each. Wouldn't you know it, about a year later, motorcycle accident, tragedy. Well, after some back and forth, because it took a long time to get the police report and a whole other like rigmarole, right? We got the $25,000 paid out to the parent. The other kids are still covered. The child rider is still in force for the other kids. Now, had that kid made it until 25, right? We could have converted that child rider policy to 125,000 with no questions asked, no medical exam, guaranteed to be insurable. Now, if the kids are healthy when they either turn 18 or age off, they can have as much coverage as they want. But the fact remains that it's there just in case, right? Because nothing's ever going to happen to our kids, right? We're never going to put that like bad juju out there. But how many people have you ever known or seen on social media or whatever where their kids get diagnosed with some sort of cancer? Their kids have some sort of, I mean, heck, kids are born diabetic. Type 1 diabetics are very, very difficult to cover, right? Kids are born with other like different types of genetic things. Well, guess what? If they're born and at 5 days old, we get them on the policy, they're covered and they're coverable forever, regardless of what they have going on when they turn 25. It's all about options, guys. And if you're going to cover one kid, well, hell, let's cover 15. My record, I think, to this day is 13. One grandparent had 13 grandchildren. So I'm waiting for somebody to beat me, right? Like, or for a new client to beat them. But that's the record as of right now. So that's just some of the like scenarios and why it matters so much. The thing that I hate when people sort of like don't understand what we do or won't even sit down and look is they just don't know, right? They have some sort of preconceived notion that life insurance is going to be too expensive, they're not coverable. Well, how do you know? How do you know? And so this goes back to like sort of getting in front of that chicken list in terms of people. And what I'm going to talk about next is sort of like buy term and invest and why the right kind of life insurance matters. Okay. And so this in from what we teach, right? This is the right kind of life insurance for most people. They need a level term policy. Why? Because it's the cheapest coverage you can get, providing the maximum death benefit. So what is level term? Level means the price today is the price all the way at the end for however long we select the term to be, right? Now, just some things that will go into it. Higher cost can come from a longer term. Why? Well, if I'm 44 and I want a 35-year term, that's going to be the same price today at 44 as when I'm 78 going into 79. So the life insurance company is taking a risk on you in those later years because do you think the odds are higher of me dying then or now? Just generally health-wise, right? Oh, way higher then. I'm going to be old and broken and sick and God knows what. Now, no, I mean, I'm going to live forever, right? But but you get the point. Like we're not designed to get healthier as we get older. We decline, right? And so if you want a longer term, you're going to pay for it. But it'll still be cheaper than if you decide at 65 that you want another 15 years worth of coverage, right? But the time span is the same. And so why might we add a shorter term policy in there? Well, let's say you need to give somebody some more coverage right now, but we still want to cover them for as long as possible. Well, maybe you put more of the coverage up front when they need it. That goes into that decreasing theory of responsibility, right? And so we can talk a little bit more about that later, but just know that at the end, right, you want to give somebody as long and all of our policies are level. So as long of a term as possible with the most coverage possible that makes sense for their budget. And then when we couple that with an investment, guys, the idea is that by the time that term is complete for the client, in theory, they should be self-insured. Okay. So what I'm gonna go through a couple of scenarios real quick. One is a real client that we replaced a cash value policy for very early on. And then I'm going to show you sort of how to think about beating cash value life insurance if somebody says that's either what they have or what they want. And then I'll answer any questions and we'll be done. Okay. So here's here's sort of where we come in with, say no to that trash value, also known as cash value, right? And yes to buy term and invest the difference. So the company has sort of transitioned lately to just buy term and invest, but if you look at any of the old stuff, it's BTID, right? Buy term, invest difference. So that's sort of what we're focused on today. So this is real, right? This was a real client. She was 24. She had only ever heard of cash value life insurance. And so she, got into her 20s and thought she was doing the right thing. She thought she was saving for her future, right? So what did she do? She listened to somebody and bought a whole life cash value life insurance policy. Okay. Because somebody sold it to her as an investment. Now, let's just sort of like analyze this a little bit, right? And stay with me here because if this was sold to somebody as an investment, I would argue that they are just flat out liars, right? Because here's the death benefit, right? So 50,000. So death benefit never changes. Basic premiums, she's paying $815 a year, so annual, right? She stops paying at age 60. It's pretty standard for most policies, right? Excuse me, at 65. So she stops paying at 65. Her death benefit stays the same, right? But let's kind of analyze these cash values that are guaranteed at the end of every policy year. So policy year 1 and 2, how much cash value is there? Big whopping goose egg, right? So none. None of your money's in the policy, right? Now that's pretty standard for every cash value life insurance policy. It will generally take somewhere between year 3 and year 5 before any actual cash is accumulated in the cash value. Okay. And so, but even look at year 5, right? Year 5, how much cash is in that guy? Not a lot, right? Not a lot. 1,800 bucks. Is this sounding like an investment yet? But wait, there's more, right? Let's go to year 60 or age 60. She's 60. She's been paying on this for 36 years, mind you. There's actually, yeah, 36 years. There's a whopping 22,541 after 36 years. Now, what do most people when they get sold these policies, right? They get told, "Oh, you can use the money to pay for college. You can use the money to buy, put a down payment on a house. You can use the money for XYZ. You can borrow it, right? You can be your own bank." All that sound kind of familiar in terms of like where these policies come from? Yeah. Well, I don't really know a whole lot of banks with one client, first of all. And then two, right? Uh, Is 22,000 at age 60 going to do a whole hell of a lot? No. And oh, by the way, this is the fun one. How old is she? I'm gonna give it away, right? The green arrow is pointing to it. How old is she going to be when the cash value equals the death benefit? Like, honestly, I don't even know how this policy is legal because most cash value policies, they they equal each other at 100. I don't know anybody making it to 120. She's been long dead at this point. And so here's just some more of the fun stuff that comes out of whole life policies, right? Because remember, cash value, you can borrow the money. So contract allows policy loans. Interest on such loans is 8% applied in arrear. Well, what the heck does that mean? Well, that means just like if you took a loan from a bank, what do you have to pay it back with? Interest, right? So you have to pay back with interest. 8% in arrears means 8% is constantly being accrued and you pay it back at the end, right? Now, here's the crazy thing. If you take a loan on the policy, you still have to keep paying your monthly premium to keep your life insurance in force. And on top of that, you have to pay back the loan repayment plus the interest. For most people, if they had to borrow some of this cash, do you really think they have the extra money to pay back their life insurance plus the loan? Not really. One of the worst scenarios I ever saw with this, guys, was one of our clients, right? She's a client still to this day. She had taken her then husband had convinced her to take a $500 loan to pay for Christmas presents from her cash value policy. He said, "Don't worry about paying it back. It doesn't really matter." Fast forward 7 years, she still had not paid it off, and she owed almost $3,700 in interest on that loan from a $500 payment or loan that she had taken on her own policy. She owed 4 grand almost. That makes no sense. That makes no sense. That does not sound like I'm being my own bank. That sounds like I'm making the bank money. And it was her own money. All right. So this is just one policy that's out there, right? There are endless variations, but I wanted you guys to see this. And here's like, remember this as we move forward, because I'm going to start breaking this down in terms of what we did to replace it. But just remember that for most policies, cash value wise, you hit cash value equaling the death benefit at age 100. Okay. Because we're going to play with a calculator here in a minute. I got to turn this off. Hang on. Hang on. There we go. Okay. So what did we do? Well, we applied and I did a precision term for her because we wanted it to come back as cheap as possible. Normally, for somebody this young, I would just do power term and let it ride. But she was on a very tight budget, right? And so we did precision term. She did the medical exam. Guess what? She came back cheaper. So the price went down drastically, right? Waiver of premium still on, 35-year level term. The price is $28 a month for a 250,000 in coverage. So that's 5x her old coverage. Let's start unpacking some of the benefits, right? Waiver of premium is on. So now she's got a $175,000 living benefit, terminal illness benefit, God forbid. It's level for 35 years. The price is not going to change, right? Minus the increasing benefit rider. Like if she decides to keep it like the other client, then that extra cost goes in a little bit. Her total annual premium, 332. Super cheap, right? We saved her almost $500 a year. So now what do we do with the difference? We invest it, right? We invest it. She was already spending the money. To her, it's irrelevant, right? The money was already being spent. So what did we do? Well, from 24 to 65, because that's generally retirement age, right? There was no money in the investment when we opened it. $40 a month at a roughly 9% rate of return. Guys, it's over 200 grand. Even if I'm wrong and the interest rate was like 6%, it still would have been 70 or 80 grand. Versus at 65, how much, right? Let's back up. At 65, how much cash value was in there? 27. Oh, by the way, she doesn't have to be dead to get it. And she had 5x the coverage along the way, right? Because the argument that some people are going to make now is, well, her life insurance is gone. Yeah, I don't care. She's got 200 grand. She's got more money and more than she would have had in life insurance anyway. Who cares, right? It's almost 10x what she would have had in cash value, and she's alive. And God forbid along the way, something would have happened to her. Her family would have gotten both. And that's what we're going to talk about right now, right? So this is how cash value actually works. You pay for two things, you only ever get one. Now, what the hell do I mean, right? So here's a generic scenario. 55-year-old man has a $500,000 in a cash value policy. He took it out when he was 30. So he's been paying on it for 25 years. 6,000 a year, 500 times 12, right? That's 6K for 25 years means he's put 150 grand into the policy. Rough estimate is that after 25 years, there's about 100 grand in there, right? Now his death benefit is 500,000. The death benefit is the death benefit. But let's just play a little game. God forbid he dies. Which one do you think his family wants? The cash value or the death benefit? 100K, 500K. I mean, it's a no-brainer. Everybody wants more, right? Like if you asked your kid, hey, do you want like 500 Roblox bucks or whatever, or 100? They're going to take more. It never changes because God forbid they take this, well, they're sacrificing 400K, but when they take this, because you know they're going to take more, who keeps this 100K? For all of you old salty people that have been around for a minute, you know it's the bank or the insurance company or anybody else, right? For some of the new people, did you guys know that? Right? Like Kim or Lakita, Ricola, did you guys know that? Crystal, did you know that? Right? And if you did, well, I mean, hell, does that seem fair? It doesn't to me, because in reality, like every year you get older, right? Like if you kept this policy, every year you get older, you're paying the same for less life insurance. Because the higher this cash value goes, this isn't changing. You're just paying for less life insurance. Because if the company's going to keep this anyway, well, effectively every year you get older that the cash value goes up, your death benefit is kind of going down because it's a trade-off, right? And so here's the real difference, and this is where you're going to go, holy smokes, right? So yeah, we know that's not fair, but check this out. 30-year-old dude, I just left it at class six, right? Standard. No, didn't get any better. We're not changing it at all. 35-year term, 500,000 in coverage is 83 bucks. 83.34. I took the difference at 416, opened a Roth IRA at a 9% rate of return. 25 years later, he still has life insurance. This is just 25 years later. Almost $500,000 in the Roth IRA. Now that's tax-free money because it's a Roth. He still has 10 years worth of life insurance. So God forbid we lose, client Bob at age 56. This is going to be close to 500,000, and this is still 500,000 plus the increasing benefit rider. This could be $1 million policy right now, and this is over 500,000, 1.5, same money, same money, right? And the craziest thing, guys, is if you kept going, right? You keep unpacking this thing because some of the arguments are going to be, well, when I get to X age, I stop paying on my life insurance and I still have it. Great. Let's get you to X age and stop investing and let's just see what happens. And let's go to 100. Okay. So let me pull this up and let me kind of show you what I'm talking about. And then I'll answer any questions and I'm going to be pretty much right on time. So 470,000, right? Watch this. This is crazy. So let's say Bob is 65, and I'll just leave it at that 470,000, right? We know it would be more. So 470,000, we're going to stop putting money in. No more money. $0, right? And at that age, right, at 65, we would then shift that into something relatively safe, right? We're not going to leave it risky anymore. So let's say about 6%. You guys sitting down? 4 million bucks. I went to age 100 because that's when the $500,000 death benefit would equal the cash, right? We stop paying on the life insurance. Who cares? If the cash is the cash, well, if you're at the same age when the cash is there, hmm, crazy. Let's go back, right? Let's run the scenario as if he were going to keep investing that 416, because remember, he stopped at 55. Now he's going to keep going until 65. He's going to leave it in the market, right? Doing the market thing. It's a hell of a lot more than 470 grand. Let's run it the rest of the way now. We'll just say 1.2. 1, 2, 3. Stops investing. Conservative investment. 6,500. No more money going in. This is just time. This is the rule of 72 at work. This is your money in the market. Now, I'm no math magician, Bob, but 500,000 in a cash value policy or close to 10. Look, even if I'm flat wrong and we just put it in something that's getting like 4%, I don't care. It's still almost $5 million. That's the power of having your money in the market and having it somewhere where it's working for you and compounding. Now, the rule of 72, like it gets tricky for sometimes, right? It's not, it's just math, but you have to have time, right? You have to have time to let the rule of 72 work. And that's why the earlier that we start investing, the younger we can start helping clients, the better, right? If you meet somebody that's 60 and we're just getting started on this, we don't have all of that time to let the money run and grow, right? That scenario works so well because we have like 70 years of that client investing money. It's a long time, right? That's why generational wealth generally stays wealthy, right? As long as there's somebody protecting it, it generally stays wealthy because at some point you can't stop it. Look, at 12%, that money's compounding and doubling every 6 years. The next time this thing clicks over, it's going to be 5.2, then it's going to be 10.4, then it's 20.8. At some point, it's like irreversible momentum. You can't stop it, right? And one last demonstration to kind of give you guys the idea of like why compounding matters. Some of you old salty peoples do not answer this. Has anybody never is there anyone that has never heard the $1 million today or a double a penny for you for 31 days? Has anyone ever heard that? Or never heard that, I should say, because I know some of you have heard it before. Has anyone never heard that? Like Crystal, if I said I'll give you $1 million right now, or if you're patient, I will give you a penny today, but you come back every day and I'll double it for you for 31 days. Which one would you take? You guys haven't heard this? Lord. Okay, here we go. Well, I mean, okay, so let's just ask the question, right? Well, iPhone, you probably have heard this before. And if it feels like a trick question, it kind of is, right? Because most people are going to say, well, give me the million. Give me the million, right? So if it's give me the million, well, great, you can have a million. But here's the kicker. Because if you took the penny, you'd be mad at me for like the first 26 days, right? So penny a day, doubled for a month. Here we go. Hopefully it breaks it down. Oh, there's a video. This is new. Let's see if it shares the sound.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44.
We don't care about you,
Day
baseball.
one, let's just say we want to see what happens for 30 days.
I don't know
We
who this guy
start
is, but
with
let's
a
see.
penny. Day two, we double it. It's 2 pennies. Day three, we're at 4 pennies.
Can you guys hear this?
So if you look at this problem for the first 3 days, we're at 4 cents after 3 days. This is looking like the brilliant bet. I mean, give me $1 million, I'll walk away, no questions asked. Let's fast forward though, because I don't want to spend.
Yeah, I don't want to listen to you that much time
Still,
either.
that's a good amount of money,
That's
but
25 days. We're at
these people are still laughing all the
167,000.
way to the bank. Let's fast forward 2 more days. We're day 27, and I use day 27 because we're just below the breaking point.
So at day 26, we'd be at like 360, 374,
864.
right? Day 27, we're
671,000
at
and change
671.
on day 27. We have 3 days left. The magic happens on day 28. Day 28, we are at 1342177. 13.
I'm gonna fast
And
forward
this
my
is
little
very
buddy.
important. I'm going to bring this over here. And this, by the way, was the breaking point where the magic happens. Day 30, we are at $5,368,709.12.
So 5.4 million, right? I like to use 31 days because you hit 10.8. You literally more than 10x what you would have had with patience, right? Patience and compounding. And you cannot get that anywhere else. There's nowhere else that you can get it other than having your money in the market. Okay. And so last thing I'll leave you with, because Haley sent me a message and just wanted to cover a couple of things. It's insurable interest, right? if you're brand new and that term that you're still sort of learning, that's okay. Basically, insurable interest means who can you legally put life insurance on, pay for it, be a beneficiary, control the policy, right? A lot of people sort of like misconstrue what that means. There's nothing, there's nothing like nefarious about it. There's nothing like bad about it. The only thing that insurable interest means is that you have some sort of like direct family relation to that person, and they have to be like straight in line with your family tree. Okay. And so here, let me show you some options and kind of what that looks like. Insurable interest basically means you, your kids, your parents, your grandparents, your spouse. That's it. You don't have insurable interest on a brother, a sister, an aunt, an uncle, right? Niece, nephew, if they live with you and you're like getting custody, they're minors, that's a different story. But basically, anyone that is an adult has to be in that direct family tree or a married spouse. Now, if you are divorced, right, you in theory still have an insurable interest on that person, especially if you're receiving some form of alimony, child support, whatever, right? That insurable interest is essentially the fact that if, God forbid, that person passes away and they do not have a life insurance policy, that income stream for you is gone, right? That is legal, it's legit. Now, obviously, the other person, the insured person, has to know about the policy. Okay. In order to be compliant, the other person has to know, they have to sign, they have to be present, right? But insurable interest means like Melissa and I are married, so I can be the policy owner, I can be the beneficiary, I can be the payer, right? Melissa is just the insured. And that same thing applies for our kids. It applies for my parents. It applies for grandparents. God rest their souls if they were still with us, right? It applies to Melissa's mom, right? And you can like extrapolate that across any other scenario that you can imagine. And so that's insurable interest. And the reason I bring that up, guys, is there are going to be times when you see the value, they don't. Not yet, right? This happens commonly with adult children, 18, 19, 20, 21, 22, 23. And the most common thing that happens there is the parent says, look, you don't get it yet. We're going to take this policy out. I'm going to pay for it. You're going to take it on and pay for it later down the road once your, frontal lobe finishes development, right? And you can make sound executive motor function decisions. But that's that's sort of the premise behind it. Um, it's also the easiest apps for promotions, right? Like if you want to get a promotion, bump your bonus, lock something in, 100%. Um, like I said, the best scenario, like the best use of that is young, healthy adult children. They kind of don't care, right? Especially like young adult men in their 20s. All they really care about is where their next monster and like can of skulls coming from, or Zin these days. That's about all they care about. Haley, did that answer the question you wanted me to kind of touch on a little bit? Yeah. Okay. Yes, if your parents are over 70, unfortunately, there's nothing that we can do because in order to put new business on someone, they have to be 70, right? Because the shortest term that we can do is a 10-year term. We can't take anyone past the age of 80 on the initial term. Now, mom and dad are 70. We put a 10-year policy on them. They can stay on that policy. It'll be the same price for 10 years. At age 80, they can decide what they want to do. They can convert the policy to decreasing term to 100, meaning they've been paying the same amount. It'll stay roughly that amount, and then every year they get older, the coverage goes down, the price stays the same. That's decreasing term all the way to 100. Or if they decided that they wanted to keep the coverage and renew it, they can't be declined. They're guaranteed to be insurable, but they're going to be 10 years older. It will be more expensive. For example, you put a $50,000 policy on mom at 70. By the time she's 80, that $50,000 policy, she can still have it. The price is probably going to be double. ish. There's no way to know exactly without the actual policy and to know what rates are going to be 10 years from now, but there will be a conversion table inside of that specific policy. So if you ever have someone that says, well, what's it going to be 37 and a half years from now when I'm 99, blah, 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 blah. I don't know, Bob. Right? And if I try to tell you right now, it wouldn't be accurate. But once we get your policy back, I will be able to show you exactly what it'll be inside of your policy. But first, we got to apply and see how it comes back. Sound good? That's how that works, guys. All right. So I'm a few minutes past, but I was on time. Haley asked me a separate question, so I was on time. But are there any other questions for anything that I covered tonight? Anything I went over, anything that needs clarification? Yes, no, maybe. Okay. If you're new and we have not met yet, even for just like a 10-minute face-to-face on Zoom, I'm going to put my calendar out, right, inside of Telegram. Please go book an appointment for tomorrow or Saturday. Even if we only get like 5 minutes, I just want to meet you. That's it, right? I just want to meet. Like I just want to get to know the new agents in the brokerage before you've been around for 2, 3, 4, 5 weeks and we haven't met yet. So I'll put that out there. Please, guys, reach out if you have questions. If you get a text message from me, it's coming from my phone. Even if it's just a Zoom link, it's coming from me, right? And so when you see those, engage it so that I know you're alive, please, right? And that I know like you have something going on. If you're busy, tell me, right? Like, but communication, I can't stress it enough. Communication is so important. And the last thing that I ever want you guys to do is sit back and wonder what's going on. That's what Telegram is for. Everybody do me a favor, check your phone, especially if you're new, and go in and look at the announcements, right? Or the like the notifications, because if it's muted, then that's not what we want. And so when I say muted, right? So like I have a bunch of them in here. So that's us, right? Like if you swipe to the left, right? See how it says mute right now? It's because it's not muted. If you look at it and it's muted, right? It would look like that to where it would be unmute. Or if you just look at it, you're going to have this little like speaker guy right there muted. We don't want that because that means you're not getting notifications, right? You're probably going to miss something. So go check it, make sure it's unmuted. And yeah, the new rep promo stuff is in there. The Zoom links are always in there. And like there you go, right? That's the office. If you ever have questions, that's the best place to start. Put a question out there. Let's just see what happens, right? Somebody will answer because there's a chance that I'm busy, Haley's busy, Treylin's busy, somebody's busy. But if you ask in there, somebody's going to respond. Somebody's named Rachel's birthday. Who's Rachel? What are you talking about? Oh.
It's Rachel Christian's birthday. She's no longer with us.
Oh yeah. Hey, that's the cool thing about Telegram though, right? She's an old agent, she's still around. If she was still around, I would know, but she's in Telegram, so I might just shoot her a message and say, hey. Yeah. You never know. She's in Alabama, she could have a temp license. She just didn't want to do it. Just saying. Just saying. All right, guys. I'm gonna get out of here. I'll put the recording out as well in case you guys want to go back and kind of go back and review that stuff. Listen, if you don't have your East Coast Builder School ticket yet, I highly recommend getting it. I promise you, you will not regret it. Listen, this weekend, like starting tonight and going through Sunday, anybody that does their anybody that does a policy, whether it's your own, somebody else's for training, whatever, anybody that does a policy, we'll get that reimbursed. We'll get your ticket cost reimbursed, right? Go book it. If you do a policy, it processes, meaning it actually went through. We'll get you reimbursed for your ticket this weekend only. Okay. So trainers, let everybody know if they're going to get a ticket, then let's get it done. Do it now. That way you get your ticket reimbursed. Whether you're going to come in person or not, remember it's recorded and you get the Zoom links. All right.
And don't forget, y'all, the ticket prices are gonna go up again. They're still at like an early bird price. It's not as cheap as they were a couple weeks ago, but they will go back up again before January.
Yep. On December 1st, they go up again. So if you know you're going to do it anyway, get it done this weekend, get your ticket, get it while it's cheaper, get it reimbursed, and we'll get you guys taken care of. All right, guys. Have a great night. I'll get the recording out tomorrow once everything processes and it'll be there. Let's go get some training in, set some appointments, and I'll throw my calendar out there as well. So if we haven't met yet, hop on. Have a good night, guys. Bye.